A trading system is only successful if it is scalable. That is, scalability is the biggest USP of the market. What scalability here means is that if you learn how to effectively trade a single security with reasonable volume, then the premise is that you will be able to trade any security with reasonable volume. Scalability is the number one trigger for any business expansion, which means that easier it is to scale, the better the business in theory or in principle. For example, let us say you have taken a franchisee of McDonald's, and you would know that it would cost several crores to successfully own and run that franchisee. And let us say after a couple of years of experience, you realize or you see success, that is, the business model works for you, you are making money in the process. Now, in order to create another McDonald's, you will realize that the barrier to entry is quite high. That is, it is very difficult to scale this business because of this high barrier to entry. Now, compare this with trading. Once you have developed a logic which is reasonable to your level of understanding at the time, and you continuously work towards improving the base logic, then by definition you should acquire success somewhere or the other by using that particular logic. So today what I have in front of us is the gold futures chart measured by as gold in US dollars, not in Indian rupee. And this is largely because you would recollect that in yesterday's video I spoke about charts with gaps in them versus charts which are continuous in nature. And I also spoke about how charts which are continuous in nature are far easier to trade than charts with gaps in them. And it is also possible to successfully scale positions much more effectively simply because of absence of any significant gap. So you will see this here is the gold futures chart on the hourly, and you can see for an extended duration of time there are absolutely no gaps in this chart. And anyone can compare this with Nifty, for example, just to have a fair idea of how clean this chart is versus, say, for example, Nifty's chart. Now, let us apply the system that we developed for analyzing and trading Nifty on gold, because as we mentioned, the objective of this entire exercise is to get into the ritual and the routine of analyzing the market using certain parameters which for some period you all will keep constant, whereas since I'm delivering this, I will keep it constant for an extended period so that more and more people at least know that much. So what is the that much? So for the interest of those who are relatively new, I would first of all suggest that in order to fully appreciate the present video, you might want to check the previous 10 videos. I am aware that most people who have YouTube channels say check the video on description below, etc. All that is not there. You could simply go to the playlist that I have created and check the last 10 videos on this topic of planning how to trade on shorter time frames, and so that you can see and also appreciate what's being learned and recognize success and failure cases as a part of routine trading activity. So let's just discuss the rules that we have gone through in the past, and therefore we will do it very quickly. The rule is very, very simple. That is, we want to trade trends. We want to trend trade. All right. The time frame that we have chosen for the purpose of academic experience is the hourly. So in other words, we are trend trading hourly charts. All right. In order to establish that a security is indeed trending, what we want to see is step 1 is we want to see ADX greater than 25. If this is happening, the security is indeed trending. Step 2 is that we want to see a 2050 crossover. After we have checked, so I'll mark this in order. This of course is the first thing that we're doing. We have decided that we're going to trend trade on the hourly charts. Then we want the hourly ADX to be greater than 25. And thirdly, we want the hourly 2050 MA to cross. If it is crossing in a golden cross, that is the 20 is above the 50, then we will be on the long side, and the vice versa is true for the short side. Once we have identified that a security is trending and that there is a golden cross, so for example golden cross, we will only trade on the long side. And similarly, if there is a death cross, we will only trade on the short side. And what is the plan of trading on the long side? We are going to buy at the 20 MA and the 50 MA with SL 1 ATR on the hourly. So I will write here 1 hourly ATR. This is the simple process. So which would mean that whenever a security qualifies, we will note where the 20 MA is, we would note where the 50 MA is, and we will take the SL as 1 hourly ATR, which is SL is equal to our last entry 50 MA minus 1 hour ATR. And because the chart is continuous, this will be continuously updated. Whereas in our other videos, we have seen that because there are ours is a discontinuous chart, we apply our trading rules only to a particular session, because as soon as the next session opens, there is a possibility that it could open anywhere, and we would not be tracking, and the indicators would not be able to measure the changes that have happened, because there is a huge change all of a sudden. So we will continuously update these values as the chart progresses. So for that we can use a very simple algo, but of course here we are only discussing for practice. So now let's just look at the gold. I'll just zoom in a bit. This is our rule, and let's just step 1 is select ADX. Okay, here I've done it actually. So step 1 is to select ADX, and the next step is to apply the 2050 crossover. So here on the vertical line that I'm marking, which I'm going to mark as a green color, and I'll make it dark. This green color vertical line indicates a golden crossover, the case that we are discussing here. And on the day or on the hour that this crossover happened, you will note that ADX value will be given here. So on the hour that this happened, you will note that the ADX value is 27, which is greater than 25. So I'll just, for now, since this is qualified, I'll just move this here. So this is, so let's see here. We are seeing a golden cross, and we are seeing this golden cross with ADX at 27. In other words, our criteria for going long, that is because ADX is greater than 25, we are claiming that it is trending. We are seeing a golden crossover, so we are claiming that it is trending long. And because it is trending, we want to buy it. And we want to buy it at the 2050 moving average. And the SL is going to be 1 ATR below our last entry. So for example, here we will see at the crossover, the moving averages are at 2950. And the ATR is roughly 7.3. So sorry, this is at 2910 and the ATR is roughly 7.3. So let us just say our SL will be at 2902, which means our entry order. So I will just mark this as red line because this is where we have to exit, and I will make it a little dark. So this is our exit order based on the current entry order. Now what will happen in the next hour? We will see that the moving average has moved up, which means our entry orders will now, so I will mark a blue line here or a green line here because this is where we plan to buy. So you will see that our first order is going to trail with the red line. So here we will see this will keep happening because as time passes the moving average also changes, and therefore finally at this value of 2918 our first buy order is traded. So I will remove this here and replace it with another vertical line because this is basically where our first buy order is traded, and it is traded at the 20 period moving average, which is at 2918. And we can see that at the time we bought, our next order would be at 2911 and our SL would be around 6 points below it, which means it would be at 2905, right? So in other words, our first trade has a 15 point SL and we are waiting for the second lot to trigger. This process continues. Now that we have bought on the 20 period MA, we simply have to wait for the second lot to trigger, if at all. And here it has traded at this value. So I will now mark with another green line, and you will note that the second lot traded at 29 12, and the ATR here is at roughly 7, which means the SL would largely remain unchanged and just move from 2904 to maybe say 2905. And we can see that the SL is not triggered. So now we are 2 lots in this particular security, and of course you will have a partial target somewhere, and the security moves favorably. Our partial target would have been triggered, of course, because even keeping 1:1 as a partial target, our average buy price, as you can see, is 29.18, and this entry is at roughly 29.12. So our average buy would be at 29.15. Our SL would be at 29.05. So even 1:1, our target would be at 29.25, which is long hit actually. So you, in theory, you can place another buy order now at the 20 period and the 50 period average, because you've hit the target. Your system is breaking even. This process continues. We are waiting now for another order to trigger, if at all, and this traded here. So I'll put another candle here, and you can see that this entry has happened at roughly 29.40. I'm talking about round numbers. We are waiting for another order at say 29.30. We know that the ATR is roughly 6 points, which means this average of 29.05 has now moved up to 29.24, because I'm subtracting 6 points from 29.30. Right? So if that trades, obviously the position will close. We continue, and of course this is looking good now. We continue with this process, and you will see how ADX is, because why are we buying? Because you will note how ADX is always above 25, which is our required threshold. Therefore, our orders, every time we hit a target, our orders are repeatedly getting placed on the 20 period, 50 period moving average. And of course, this SL line is going to trail the 50 period moving average, which I will just update at the time of a fresh order. And and here we have another trade. You will note this is now happening at nearly 3000 levels. So I will add another entry here, and obviously now we are planned to enter again. This happened at 3000. This entry is at 29.65 or 66. The ATR is at roughly 8.7.5 points. So 29.66 minus say 7.5 points is roughly 29.59 or 58. Let's put it that way here. So this is where our SL has moved up, and one order is traded. We will not react here because our 20 period order is already traded. We are obviously placed our second order on the green line, and we are waiting for it to trade. And this low is actually a trade. We are talking about strict theoretical application of the technique, and you will note what a small gap. This is the 2-hour closing that we were referring to in an otherwise 24-hour market. It's a negligible gap compared to what we are used to. And our second lot is triggered. You will also see here that this is happening at 29.90. The ATR is at 6. So this will obviously move up to 29.84 or 85, however you'd like it. And we are now waiting, either the SL will hit or a target will hit. Because we have full positions in, we are not buying again. We are waiting for targets. Obviously, if we are entering at 29.90 with a 5-point SL, usually it would have a target of 29.95, which has definitely hit, or maybe even 3000. But let's just assume that nothing big has happened. So this process is continuing. Here also, there is nothing to react because we have already bought here. We are already full positions. And even if suppose you took the target, if you took the target, then in that case, we will have to say we bought here as well. And now you will note here that the moving average is at 29.90, and the ATR is again at 6.5. So which means the SL is exactly the same. 29.90 minus 6.5 would be 29.84.5, which is where the SL is. So the SL hasn't triggered. So however you like it, you can make an adjustment for it. And there is no ambiguity now that the target has hit. There is absolutely no ambiguity, which means here maybe we could argue, but maybe an aggressive trader, active trader booked it. But here even the most passive trader would have had realized that particular target. And this continues. Obviously, we are planning to rebuy it. We're planning to rebuy this trade. This continues all the way, and here we will again buy because our trade would have triggered. And this time now we are seeing we are preferring to buy at 3017 with roughly 5 points as ATR. So which means 3012 would now become my SL. And we continue this process, and we are looking to buy at the green line now because the red line buy has been completed. It's not yet traded the green line. We continue, and here it has traded, the green line, which means this is our candle. I will mark this here, and now here you will see that the green line is actually trading at, I'll just lower this image to see the value. You will see that the green line at the time we got traded is roughly at 3046. The ATR is roughly 7, which means 3039 would be our SL. So I will put this here. It's a 3938, and you would see that we even got traded out. And at the time that we got traded out, the ADX is roughly at 25.07, which means any further dip and it will go below 24. And we know that our rule is hourly ADX should be greater than 25, and that there should be this crossover. So we have just got stopped out, and the price action is continuing with the ADX currently at 22. Right? In other words, you would note how an entry, the first entry on gold, which actually started at 29.19, finally got closed at 3039. And all of this was done with repeated entries and with strict adherence to these techniques that we have outlined here. Now compare this. Now you will note this is a gap here. So if I take the cursor here, you will see this portion that I'm just going to mark in a blue so that you can note the gap here. Now this is the gap. So the previous closing was at 29.97, and when this gap happened, it opened at 3000 with 3-point gap on gold on a security worth 3000 points. And you compare this on the other side, say for example with Nifty chart, and now look at these gaps here. Look at this gap. This is a breakaway gap, another gap, and you will notice how our 20-50 moving averages are spread across and how ADX is where it is. I mean, it's obvious it will be very high. So the intention was to tell the user that all trading systems work, and of course when our first trade triggered here, at this point, we did not know how many lots would get re-triggered, how often we would hit the target, but we certainly knew where we will exit, how much loss we will take, when we will re-enter. All of this was a part of the plan. And no matter what trading system you choose, that system is designed to give money at some point. If you choose a trending system, it is going to give you money at some point. And this is an example of where we take a trending system and potentially ride it till the farthest possible value. Of course, when you would have booked out at 36, 37, you would have given off almost 35 points of gains on gold. But you captured around 120 points gains, and you did that on multiple fronts, and never did you risk more than one ATR, which is just 6-7 points from your last purchase. So the intention was to show you, because the gold trade actually has this is live price action, of course, just about a couple of hours ago, gold has hit this long time SL from an hourly chart perspective. So I thought that maybe I'll share this with you. And I would also share that how, if a security trends, then our trending system will work, and how we will recognize when a security is trending, when it is ranging, and what will be our decisions in such a case once we have recognized that pattern. So this is a process of manual back testing. I hope this has helped the traders in some way. And hopefully you would apply it at your end on various securities, these rules that I've shared. And by back testing very often, it gives the individual confidence to deploy a system and to expect the variances that are coming because of the system, because there are cases where you also get paid quite a bit. So with that knowledge, it becomes easier to behave in accordance with your system. And the intention was to add that bit of information that whatever we are recommending here, we means I, recommending here to you, is definitely going to work in certain market types. And if it works, you will not just get this one trade, you will repeatedly keep getting called. And by definition, you will be pyramiding, and hopefully you will be able to capture an absolute huge move, because it's not just that you captured 120 points of move. The number of times you entered and almost all of them being correct till you finally booked a loss, that is going to be the real differentiator between I would say a successful trader and a trader who breaks even by reaching a reasonable level in trading. This is my opinion. So all the best, and thank you for your time.